Iba, I am me, Olumna, Wuya, to guarantee. In the Jamato, guarantee. Hey, I'll pay my tax. Aqua Papa, Suku Papa, a human hospital, Papa, guarantee. Hey, in the Jamato. Aqua Papa, Suku Papa, a human hospital, Papa, guarantee. Yeah, I will pay my tax. It's a service to Ghana to pay my taxes.
What did I got the cute?
Some Babu by human, ready to one day.
What can tax me feel?
Yeah, I am me.
Navinia, Mabia, Kanuana,
Guarantee. I will pay my tax.
Tikana live against him so good. Yacho me play oji.
The guarantee. I will pay my tax. Everybody does a guarantee. In the Jamato. Guarantee. I will pay my tax.
Minamia China Gana Lazy.
Aqua Papa, Suku Papa, a human hospital, Papa, guarantee. In the Jamato. Aqua Papa, Suku Papa, a human hospital, Papa, guarantee. I will pay my tax. It's a Ghana be I am in your mind, Papa, empty your tax can grab it. I am a missing, a carpenter, hairdress and barbening. Guarantee me. Pay your tax, pay your tax, pay
Inazama messing way. Fita ke welda be fair.
guarantee. I will pay my tax.
Minamia China Gana
It's a
Lazy.
guarantee. In the Jamato. Guarantee. I will pay my tax.
What can tax me feel?
Aqua Papa, Suku Papa, a human hospital, Papa, guarantee. In the Jamato. Aqua Papa, Suku Papa, a human hospital, Papa, guarantee. I will pay my tax.
These two initiatives reflect the government's renewed commitment to reset, rebuild the economy, strengthen revenue mobilization, and restore trust in our tax administration system. Your Excellency, Ghana's tax compliance challenge, particularly in the informal sector, is well known. Data from the Ghana Statistical Service 2023 revealed that the informal sector makes up 80% of Ghana's workforce. However, its contribution to GDP, as the Commissioner General said, is just around 30%. Though the informal economy employs many Ghanaians, only a small proportion are registered taxpayers. This gap exists largely because many of our informal sector lack basic knowledge of how the tax system works and how taxes they pay benefit communities. The government, under the research strategy, through the Ministry of Finance and the Ghana Revenue Authority, has initiated the Sustained Tax Education Campaign, a 3-year, as Commissioner General rightly said, a 3-year nationwide drive to increase tax awareness, promote voluntary compliance, and nurture responsible citizenship. As announced in the 2025 budget statement by the Honorable Minister for Finance, Dr. Keisel Atiforson, an aggressive and sustained tax education campaign over the next 3 years will be undertaken to ensure improved compliance and revenue mobilization. This campaign will leverage existing structures within the JRE, multiple platforms, including radio, television, social media, schools, and community engagement, to make tax knowledge accessible to all citizens and residents. The campaign, amongst others, aims to connect the act of paying taxes to the visible benefits citizens enjoy: the roads we drive on, the schools, the hospitals we use, and the peace and security that sustain our nation. Your Excellency, it is instructive to note that when people understand the purpose of taxation and trust that their contributions are used wisely, they are more likely to comply willingly. Education builds this trust, and trust builds a stronger nation. Complementing this educational drive is the modified taxation scheme, a simplified system designed to make tax compliance easier for individuals and small businesses in the informal sector.
Good afternoon, good evening, good morning, depending on where you are. And we welcome you to our second public lecture. Indeed, taking it from where the GRA board chairman said, sustained public education is the essence of our meeting this afternoon. On the 2nd of January 2026, we had the privilege to meet one GRA technical and well-informed officer who came to walk us through some of the urgent questions that we needed to answer as part of the VAT reform. Today, we've met here again, as we promised, to walk you through the VAT Act. Indeed, VAT reform is here. And for us, we just have to learn what has changed and then fully comply. So we promise that we're going to get the immediate past Commissioner DTRD, who was instrumental in the change. I remember I was one time with him when we were doing the public engagement. He accepted, and today we are here to listen to him. What has changed? Why the change? And then what do we need to do? So, Mr. Gyamera, I don't know whether you can hear me. Just say hi.
Hello. Yeah.
Thank you very much. Yeah, okay. Mr. Gyamera, I can hear you.
Yes.
Thank you. I just wanted to test the mic. So before Mr. Gyamera takes the screen, we would like to invite our president, Madam Tina Pia. Tina, I think Tina is in the... Tina, let me know if you can hear me. Otherwise, I need to unmute you so that we can, take some welcome remarks from the lady president. Tina, can you hear me? Okay, let me try one more time. Tina, can you hear me?
Yes, please, I can now hear you.
Great. Thank you very much. And so before we start, we would like to, as the president and the leader of the institute, we would like to hear something from you so that we can welcome Mr. Gyamera, who is going to walk us through what he and his team did before he left office. So Tina, over to you.
Thank you so much, Mr. Timo Boy. Distinguished guests, colleagues, practitioners, and friends of the Institute, good afternoon and a very well welcome to you all. A new VAT era has indeed begun in Ghana, and moments like this are critical. Tax laws do not operate in theory alone. They shape business decisions, affect household costs, and influence compliance across the economy. It is therefore essential that we understand not just what has changed, but how these changes apply in practice. Today's session reflects CITG's commitment to practical tax education and informal public discussion. We are particularly honored to host the immediate past Commissioner of the Domestic Tax Revenue Division of the Ghana Revenue Authority, Mr. Edward Apenteng Gyamera, and a council member of Chartered Institute of Taxation Ghana, whose depth of experience positions him uniquely to guide us through the new VAT Act, session by session, with clarity and insight. Today is a walkthrough, so we may not be able to deal with specific individual problems with the implementation of the VAT. Based on the comments and questions we have received so far from the general public, it is obvious that we need to organize a depth dive into the technical sessions of the law. We are therefore going to organize 3 technical sessions across the 16 regions. Please watch out for announcements on this. And please ask questions on today's session. On behalf of the Governing Council of the Chartered Institute of Taxation Ghana, I thank you for making time to join us and for your continued trust in CITG as a partner in tax education. I wish you all an insightful and productive session. Thank you.
Thank you very much, Madam President. And indeed, like President said, we ask the public, professionals, and members to send questions. And it looks like we need to organize technical sessions to, digest the new sessions, especially the critical changes that has come. And so we have no choice than to organize the technical session. So please watch out. Before the close of this session, we will announce some few, topics or some few regions so that you can prepare with the relevant dates. It's going to be virtual so that you join. At that session, I believe that you will have the opportunity to ask all the relevant questions, how it affects your books. Then we will find a way to comply. So, Mr. Gyamera, I think at this point, let me come to you. If you can see my screen, I'm getting the request that you put on your screen so that those who don't know you will see your face. So, if you can put on your video, and as well, if you can see my screen, we are all yours, ready to listen to you. What was put correct? I think I can see you. So,
okay.
I will control the screen from here for you, provided you can see it. So we are here for you. Over to you, Mr. Gyamera.
Okay, thank you very much, Director of Education, CITG. Let me acknowledge the presence of the Lady President, Madam Tina, Council members, President of the Council, current Council, Her Ladyship Margaret Webon, and other Council members who are listening. President, past, present Council members, and my seniors who are also listening, who are online listening to this very important topic, VAT Act, and all protocols observed. Today's discussion is going to center on the section by section work of the new VAT Act, Act 1151 by the President, and its implementation has already commenced. Today, we're going to look at what informed these changes, what has changed, what do we need to know as practitioners and business people so that we will get a full understanding of the changes that has happened to ensure that we all comply with the VAT Act. I will be your driver today to walk you through this act. So the outline of my presentation, I'll just give you a brief background, the structure of the new VAT Act, section by section, as I've been tasked to do. Then I'll add the schedules and end it with questions. So what is the background to this VAT reform? As you all of us are aware, the VAT Act 870 has been in for over 10 years. But so, and it has seen several implementation challenges, and which stated that there's a need for us to consolidate the VAT that we have. We have a lot of, it has seen a lot of amendment over the years. And in fact, if you look at from 2013 to 2024, the VAT Act alone has seen over 12 amendments, not sections, 12 different amendments. And when you talk about sections, there are numerous sections that have been affected. And as a result of this, it made compliance very, very difficult. And this contributed to the complexity of the VAT regime that we are administering. So it's not for nothing that our VAT revenue contribution has been one of the lowest in the sub-region because of the structure and the regime that we were operating. And therefore, there is the need for us to consolidate the various amendments, improve clarity, make sure we clarify certain things and have consistency, and there will be a legal certainty. Legal certainty in the sense that where there are ambiguities, the new law has tried to explain and clarify it. So in 2025 budget, which was read by the Honorable Minister of Finance, the government made an indication that there's going to be a comprehensive review of the VAT Act as part of the broader measures to enhance domestic revenue mobilization and improve efficiency in tax administration in Ghana. And of course, if you look at, as I indicated, the contribution of VAT to total revenue has been hovering around 20, 22, 23%. When in the sub-region, others are doing 48, other 35%. So what can we all do to improve on the VAT? So that is why the minister indicated that then there is the need for us to have comprehensive VAT tax regime reform. And as part of the reform, and which we now have a new act, the minister made an indication that certain things will have to be done. One of them has to do with the COVID levy. And as we speak now, the COVID levy, which was passed in 2021, has now been abolished. One of the challenges we had in the VAT is the way we manage the National Health Insurance Levy and the GET Fund, that is the Ghana National Trust Fund Levy, which was decoupled from the VAT, made it a straight levy, not allowing businesses to claim the input tax, which actually created a lot of cascading. So what it means is that previously, because businesses were unable to claim the inputs, if you incur the levies, what it means is that if it travels to 2-3 supply chain, then it means that the tax on it will double or triple, and in some cases, it quadruples. And that was a big challenge. And therefore, with the new VAT Act, the coming in of 1151, the National Health Insurance Levy and the Ghana Education Trust Levy has now been reversed to enable businesses now to claim the input tax credit on the levies. So this is something which is good for businesses, and we need to take note that now it is not a straight levy that we treat it as part of your cost. It is managed alongside the way that VAT is computed. So there's input, output, which we used to have before the amendment came in 2019. So what is the structure of the new VAT? The new VAT Act has 75 sections, as against the previous one, which we had 66 sections. After going through this presentation, you realize that some of the sections, which are very lengthy, have been separated, and that is what is making this 75. Just to clarify and make it simple for all of us to read, understand, and be able to comply. Again, 870 had 6 schedules attached to the Act. The new Act has 5. The change here is very simple. The old Schedule 6, which dealt with transitional provision has now been treated as a section in the new Act. So Section 74 of the new Act actually treats the transitional provision, which hitherto was a schedule. And that is how come you now have 5 schedules as against 6 in 870. So, colleagues, and I will now move on to walk all of us through section by section. I will take the opportunity to explain the rationale behind some of the changes that has happened. And where there is no change, we'll move on. So we'll start, and I'm going to walk you through all the sessions from section 1 to 74. Then I will take you also through the 5 schedules. So for section 1, there isn't any material change. So we need to take note of it. That the section 1, which deals with the imposition of tax of the value added, nothing has changed. Similarly, section 2, persons liable to pay the tax, the provision still remains the same. The rate of tax, here we have a significant change, or let me say there is a change. The VAT rate has been maintained at 15%. So far as the VAT rate is concerned, it's still 15%. However, the flat rate scheme that we operated over the years for some categories of businesses have now been abolished. So what it means is that now if you are dealing in a taxable supply, you are required to come on board and charge VAT at the standard rates. So as we speak now, no business is required to charge flat rates in the country. The flat rate has been abolished, and that is what we need to know. And in fact, why have we realized that the flat rate was one of the distortions that we had in our VAT rate. And the truth must be told, were we operating a value-added tax system, or we were operating a hybrid system of value-added tax, sales tax, or turnover tax? And for most of us, we know turnover tax has been abolished so long ago. So what were we operating? And this distortion is what has been corrected in the new VAT Act, that if we are operating VAT, we are operating VAT. And if you qualify to register for VAT, you register and charge VAT at the standard rates. Section 4, no change in section 4. You see the drafting is just showing some bit of clarity. So there isn't any change so far as section 4 is concerned.
I'm not sure whether I've lost Mr. Gyamera, but all of a sudden, okay, he's back now. Right, Mr. Gyamera, we lost you a bit. Kindly unmute and come. Unmute.
Hello.
Correct. So
it's okay now.
Yes, it's okay now. So take the section 5 again.
Okay, thank you very much. Okay, taxable stock activity, section 5. The section 5, as we have in the new Act, has been redrafted to provide clarity, and also has been amended to introduce exploration of natural of traditional products other than cocoa, beans, coffee, and sherbet as taxable activities. We didn't have this under 870. This has now been there to introduce this in the new act. The next section has to do with the persons required to register. Again, here in this section, registration with these 9 sessions and in the same sessions. Here, slight changes under 870. Threshold was meant for goods and services. In this new act, for persons that are dealing in supply of service, there is no threshold. So once you are dealing in services, you are required by the law, the VAT Act, to register and pay for the tax, unless otherwise you have been directed by the Commissioner General. So what it means is that the law recognizes that some services may not attract the VAT. Commissioner General will come up with the guidelines as to which type of services that are not supposed to attract the tax, which are supposed to attract. And let me say here that why this change is that all of us are aware, and we've been talking about how do we expand the tax nets. Over the years, we've been talking about it. And one of people that we've all been struggling with has to do with the service providers, including accountants and practitioners like all of us on the platform now. So now made it that once you are providing services, you don't need to, you don't come under the threshold. The threshold that has been provided is limited to those who are dealing of goods only, supply of goods only. And as I've indicated, this also has changed the threshold from the 200,000 to 150. What it means is that now the annual turnover to register for the VAT is 750. And in fact, this has been done because the time that the 200,000 was given as threshold, which is 2015, and we know inflation and other things that have all occurred. So considering the consumer price index and the inflation, the 750 is the appropriate threshold for persons who are registrable to charge the VAT. But for, as I said, for services, so I'm expecting that practitioners who are listening to me after this, if you are not registered with the Ghana Revenue Authority, quickly run to any of the tax offices and register and start charging VAT on the services that you provide, because the law mandates you to register and start charging unless you have been exempted by the Commissioner General. So let's take note of that. We move on to section 7, which deals with exemptions regarding threshold. And the old law gave some exemption, which included national, regional, and local authority and bodies that carry on and other bodies. The law has taken this out. The reason being that if you are a regional or local authority and you are dealing in taxable supply, the law is very clear that you are required to register. and charge the VAT. Only to provide in the exemption provision. That is the reason why we have this change in 1151. Period of becoming a taxable person, there isn't any change. Notice of registration, there isn't any change except you see some clarification. Certificate of registration, there isn't any change. Notice of registration or cancellation in respect of turnover, there isn't any change. Section 12, designation of taxable person in respect of groups and distinct division, no change. Voluntary registration, there isn't any change. Compulsory registration, there isn't any change except all of this. There has been some clarity. Then resident persons who provide telecommunication services or electronic commerce. This section has seen some introduction of a definition of registered agent. Either we didn't have that. And also there is a definition for digital services. And all these ones have been provided under the interpretation section. So when you go into the interpretation section of this act, you see the tax registered agent and definition for digital services have all been provided. Again, this section has now mandated giving power to the Commissioner General to appoint a person to collect the tax and the levy on the supply made by a taxable person. Here, we're dealing with the e-commerce and people who are dealing in trading in the digital space. So Commissioner General has been given power under this section that where the need be for Commissioner General to appoint an agent to collect the tax on his behalf, the Commissioner General has the mandate to do that. So this is a new change, a new insertion in this section. Section 16, sanction for failure to register hasn't changed. It's the same. Upfront VAT of the VAT, ladies and gentlemen, the rate of the upfront payment has been increased to 20%. And as we all know, this is a compliance measure which was introduced to ensure that persons will be encouraged to register if they are dealing in taxable supply, who are importing in commercial quantities, but fail to register. So this is just a compliance measure. If you register, you don't pay. But we have seen over the years that in spite of this, people are still going through paying this upfront levy at the port without coming to the domestic front to register. And one of the reasons we saw was that people were too comfortable on 5%. They pay that one and they go under the water. So now this has been changed just to be in line, consistent with the effective VAT rates. And as I indicated, this is a measure and we need to take note. So if you have a client that is paying this upfront VAT and is complaining, all what you need to tell the client is that, Master, go and register and be free. If you register and you are filing, paying your taxes to the Ghana Revenue Authority, you are not required to pay this. For section 18, for register of taxable person, no change. Notice of change in business, no change. Section 20, which deals with cancellation of registration. In fact, there is a slight change in this. We realize that if you keep, we maintain fixed place of business in the law, it doesn't work in modern days. You know that people are doing businesses without having a fixed place of business. And therefore, the new law has now deleted that from the cancellation of registration provision. Supply of goods and services. Under 870, these two were treated as one section. As I said, for clarity and for simplification, we have sessions dealing with goods and services. So we now have a separate session dealing with supply of goods and another one dealing with supply of services. But the content is the same. Section 23, repossession of goods. As supply of goods, there is no change. Layaway agreement in section 24, there isn't. Separate supply, no change. Activities that do not constitute supply of goods or service, no change. Effect of denial of tax. Again, it's not section 27, there is no change. Section 28 deals with payment of deposit and receipt of claim as of goods or services. The value is the same as 870. Disposition of taxable activity. Here, there is an introduction of a subsection 1A, and that subsection reads, the disposition of a taxable activity include a disposition of a part of a taxable activity capable of being operated separately by a taxable person is a lie of goods under section 3 of section. And this is to provide clarity to this provision. Section 30, we have phone cards, prepaid, airtime, and other payments as supply of services, no change. Mixed supply in section 31, there is no change. 32, supply by agent or auction, no change. Taxable supply, no change except redrafting of the provision. Payment of tax on importation of goods or supply. The only see here is the reference. Under the previous law, the reference was made to PNDC law, LP law. So this one has now amended it to reference to the Cost Act 2015 Act 891. Otherwise, the content is the same. Section 35, exempt supply, has the same and zero rated supply, no change. Exempt imports, under section 37, there has been a slight change because we all know there was a big between items that were exempted at the port and were also taxed at the domestic front. And this happened because of the anomaly that we had. And it was because the reference to the act was wrong. This has been corrected, and it's now been replaced with Part C of the third schedule of the harmonized code. So that is the change that you see. So now This exemption applies to items that are listed under Part C of the third schedule of the Harmonized Code. The relief from tax under Section 39 the same. Time of supply under Section 39, relief from tax is 38, no change. Section 39, which deals with time of supply, no change. Time of import, no change. Now we come to another separation. As I indicated, if you look at 8.7, place of supply of goods and services was too long. So this Act 1151 has separated them into two sections. So we now have Section 41, the place of supply of goods. So when you are looking at goods, you know what will constitute place of supply. Then you move to 42. 42 gives you what constitutes supply of service. This has been done. This separation has been done for clarity and simplification purpose, for all of us to be able to read and be able to apply and comply. Because once you comply, definitely revenues will come. Now, 43 deals with issue of tax invoice or receipts. Here, ladies and gentlemen, there isn't much change, except that here we have combined a number of receipting. Under the satisfied invoicing system, which we had an amendment somewhere in 2022, 2023, Commissioner came up with the invoicing system. That has been included in this section. The old system where Commissioner General gives approval is also there. Then in 2018, we passed the Physical Electronic Device Act, which also had its own invoicing system. Aspect of that one has also been included in this section. And that's how come you see the reward scheme, which has been included in the Act. So this time around, as part of the compliance, you keep your receipts, and the receipt can to as a reward scheme for any reward scheme that the Commissioner General may introduce. And this is done as a way of promoting tax compliance. We have a situation where a lot of people go transact business without taking receipts. But now you know that when you demand your VAT receipts or your VAT invoice, this VAT invoice in future can to run a reward scheme for you. So that we expect that now each and every one of us will start demanding our VAT receipt for our for taxpayers to also pay the appropriate taxes that we have paid. So that is what you see in Section 43 of Act 1151. Act 44, ladies and gentlemen, 44, which was the old 43, is the section which created a lot of challenges for us. Because the cascading that we saw, where some of us were saying that, why the VAT rate is more than 21? Because you add NHL, get then the COVID 6 plus 15, 21. Why were we getting more than 21? And we had almost 22. It's because of how that section was framed. This has been corrected or has been amended to define the taxable supply to exclude the GET fund, NHIL, and the tourism levy. What it means is that the taxable supply does not include these three levies. And we need to take note of that when our customers are preparing or our clients are doing their investments, that these two are no longer part of the, should not be added to the taxable value. 45, taxable for determining tax on imported goods and services. There is no change except the provision is done for clarity purpose. Adjustments, no change. Section 4, adjustment on account of bad debt. Again, there has been an introduction of a provision which is in line with what we have in the Income Tax Act for the Commissioner General to determine what has become irrecoverable in the treatment of bad debt. So the method or the methodology used by the Commissioner General to accept a bad debt for income tax purposes and for VAT purposes have now been synchronized. And that is what you see in section 47. 48, no change. 49, 50, and 51. Ladies and gentlemen and colleagues, you agree with me that the old section 48 was one of the longest sections, which was making reading difficult. And I think that alone had about pages. This act has now tried to separate it into 3 sections. So section 49 is dealing with deductible input. Now, application for deductibility of input tax, which was part of the old 48, is now treated separately, stand alone. Then other conditions for deductible input tax is also treated as a separate section. And as I indicated, all these things have been done to provide clarity and make implementation simple for everyone. 52, deductible input tax for mixed taxable and exempt supply, no change. Refund or credit for tax paid. There is an introduction here that a person provision for a person who qualified for relief under section 38 to apply for the of the excess credit. So if you are under relief supply, then the law now provides that you can now apply for to the Commissioner General to be paid the refund of the credit, refund of the credit that has accumulated to you. That is the introduction in section 53. Time of payment of refund, no. Now we come to the section with this with withholding tax. Appointment of withholding, value added withholding tax, no change. Duties of a value added tax withholding agent, There is an introduction, and this section now introduces a subsection 2, which provides that once the VAT withholding agent has withheld the tax and paid it to the Commissioner General, then the tax is considered to have been paid to the withholding for the purpose of any claim by the withhold payment of the tax that is withheld. So it's sort of an automatic credit that will go to the withholdee's account. 57, the scope of the withholding, the value-added tax withholding agent hasn't changed. 58, now, when we did the stakeholder sensitization as part of the process to come up with this, one of the comments that came out strongly, that why are we not exempting compliant taxpayers from incurring this? So government has listened to all of us, and now there is a section which provides that the Commissioner General can now exempt persons in writing from VAT withholding tax based on personal satisfactory tax record, just as we have in the income tax. So similar thing will be done for VAT withholding, and I'm expecting the guidelines to grant this exemption soon from the Commissioner General's office. Section 59, submission of tax return, there isn't any change, and except that now the 870 treated tax return and tax payment as one section. Now the return and the payment have been separated. So we have a section dealing with of the return and payment of the tax. In any case, the sanctions applicable to this are different under the Revenue Administration Act. So it's good we separate the two for clarity. If you fail to submit the, you have your sanction. If you fail to pay the tax, there is a different sanction. So these two sections have been separated for purposes of clarity. So date of payment are explained. Payment of tax on import of service, no change. Again, assessment of tax and collection of tax return. We now have two sections. So what it means that the oath has been separated to have assessment of the tax standing on its own, and collection of the tax return also standing on its own in section 62 and 60 respectively. Colleagues, 64, 65 of the Act also has there's no change so far as this section is concerned. Section 66 and 66, failure to issue tax invoice. Under the old regime, we didn't have any administrative sanction. This section, this act has now introduced administrative section in this particular act, which provide that in addition to the penalty, the custodian and all that, there is an administrative sanction which has been provided that the person who failed to issue VAT invoice will pay a penalty of more than 50,000 currency points, or 3 times the amount of the tax involved, whichever is higher. So this is an insertion in in failure to pay tax, failure to issue provision. Similarly, evasion of tax, we realized that the sanctions were not punitive enough. When you read the new act, the sanctions have been tightened, it's more punitive for people to try to avoid, to try not to evade the tax. 68, tax price, no change. Declaration of representative, no change. Person acting in a representative capacity, no change. Regulations 72 deals with interpretation. And in this section, in fact, now has all the interpretation put together. So when we come to the schedules, schedule, for instance, under the old regime 870, the first schedule starts with definitions before it lists the items that were exempted. First schedule. But what this act has now done is that all these definitions have been removed and placed under the interpretation section. So when you are the first schedule, second schedule, and you are looking at the definitions that we had previously, commercial, rental, accommodation, in housing, dwelling, education, all those things are now the interpretation section. And that is what you see to make it, simpler. So when you are reading interpretation, you are reading interpretation. When you are reading items that are exempted, supplies that are exempted, you are reading that, and so forth and so on. The repeal provision, this section repeals, of course, Act 873. Then transitional provision, this section clarifies that subject to Act, exemption or zero rating granted outside the Act or its regulation will not take effect for purposes of the Act until a corresponding amendment is formally incorporated into the Act. Then 75 deals with the commencement date of the Act, which is 1st January 2026. So this is a section by section, but of course we can't finish this going to schedules. So we would add the schedules to it to complete the walkthrough of the acts. So move on to what changes seen in the schedule. So first we move to Schedule 1, the first schedule. So for the first schedule, as I indicated, all the definitions have been moved. In addition, you see that when you move into the definition column, we have interpretation changes with respect to kerosene. So the definition that has now been provided for kerosene includes aviation turbine kerosene. So now priority for us to know that aviation turbine kerosene is part of the supply of crude oil and hydrocarbon products that are exempt at the Act. So that is what you see. Again, in 2019, there was an insertion to introduce management fee charged by local fund managers, management licensed private equity fund, venture capital fund, or mutual fund. So this management fee, this amendment was done in 2019 at 1005, exempt this management fee from the tax. And this is seen to be an anomaly because if other service providers are paying the VAT, why should persons earning fee, management fee, service fee for private equity fund, venture capital fund, and mutual fund be exempted? This has been taken out, deleted from the first schedule for fairness in tax administration. Schedule 2. For Schedule 2, the exempt, that is that which this with zero rating supplies. Extension is provided for manufacturers of locally textiles to be extended until December 2028. So under the old system, it was supposed to have ended in 2025. Government has extended it for local textiles manufacturers to continue enjoying the zero rating up to December 31st, 2028. In addition, what we see in the schedule is that there has been some expansion and simplification of some transactions that were creating problems, interpretation challenges for practitioners, administrators. And this has to do with freight and insurance directly attributable to export of goods, stevedore related to transit and transshipment, port operations related to transshipment, shipping line charges related to transit and transshipment. All these have now been included as part of the zero rated supply clarity. The third schedule, which deals with relief supply, and again, as part of the consultation and what government intend to expand prospecting activities in the country, the supply of goods and services in connection with recognizance of prospecting by holder of a recognizance license or prospecting license issued in accordance with the Mining Act, and that person is registered, underlined, with the Ghana Revenue Authority, is now relieved from the VAT. So this was also articulated well during the stakeholder engagement, and government has taken it up and treated it as a relief supply in the new VAT Act. Again, as part of the stakeholder engagement, AGI also was the view that the register to relieve manufacturers, which was done once a year, was problematic for some of them. And therefore, they requested that it should be reviewed quarterly. Government has now agreed that the register will be reviewed every 6 months. So that those who have new items to include or they have items that should be taken out can apply during the review stage, during the 6-month review stage. So that has been taken care of in the third schedule. The fourth schedule, which deals with the tax debit note, there isn't any material changes to this schedule. Similarly, Schedule 5, appointment of input tax, there have been no material changes to this act. So, ladies and gentlemen, the assignment that you gave to your humble servant to walk you through the act, this is what I have for you. Thank you very much.
Thank you, Mr. Gyamera, Past Commissioner for Domestic Tax Revenue Division. That was indeed a very fine walkthrough. And Mr. Gyamera, I'm going to start taking the questions and see how we can address some of them. Please, we've seen a number of posts on the chat, posting your emails that we should share the slides. Please, we're going to post the slides here, so there's no need for you to share your email, so that when we post it here, you can conveniently download it onto your laptop or your phone, then you can make use of it. Mr. Gyamera, some are asking that, yes, COVID-19 is gone, the recoupling has been done, but some companies or some businesses still have the same price tag. Is there any reason for that? Mr. Gyamera, are you with me?
Yeah, yes, I'm with you.
Yes. So
I don't think so. The businesses are not being to all of us, because government has given this abolish these taxes to leave all of us, for all of us to benefit from the tax. So why are they not changing it? So I expect that practitioners will advise their clients to relook at their pricing, and at least for nothing at all, we know that 1% COVID levy is gone, and then effective VAT rate, which is supposed to be 2.20, almost 22%, per the new act, the effective is coming to 20%. So why in the price? I personally don't understand why businesses. Maybe we need to throw this question to the business community. In spite of all these giveaways by government, why are they doing that? If you have the business, they should be able to answer them. But I personally think that it's not fair to Ghanaians. Yeah, Francis. Hello. Hello. Francis. Hello. Hello. Okay. Hello. Oh. Francis, I'm done. Yeah, Francis.
okay, my apologies. I think something happened to my network. Mr. Gyamera, can you hear me?
Yes, please.
Okay. All right. So there's another question that says that you should throw more light on the CST, if you can hear.
Yeah, I can hear you.
Okay. So the CST, someone, Theodora is saying that, Mr. Gyamera, please throw more light on the CST. I think in relation to the tourism levy.
The taxable value.
Correct.
The
correct.
taxable value.
Yes.
Yeah. In fact, Thank you, Francis. I think as the law stands now, CS, that has not been captured in the new act. So it's presupposed that that should be added in arriving at the taxable value. That is my comment. Thank you.
Frank Mochia is asking, so what happens to those who are charging, who were on the flat rate? Are they supposed to stop charging?
Okay, so thank you. I think the law now has given a threshold. If you know your threshold will be more than 50,000 for a year, or when you do it for a quarter, it's going to be 125 or something of that sort. Then you are required to now start charging the tax as standard. If you are below that, then you are out of scope per the new act, meaning that you are not registrable. Maybe under the modified taxation, you modify taxes and pay the appropriate taxes. But under the new act, if your turnover is below 750, you are not required to register for the VAT. But if you are above, register and charge the VAT at standard rate.
Great. Mr. Gyamera, there's a question on the services. Yes, we've heard you explain that we're going to wait for Commissioner General to issue guidelines. But the question is, if I do not register and later Commissioner General come and tell me that, look, you were supposed to have registered, you didn't register. Am I supposed to pay penalties for non-registration as at that time?
Yes, of course, that is what the law says. You are supposed, if you are dealing in a taxable service, you are required to register within 30 days after engaging in that taxable activity, unless otherwise directed by the Commissioner General. So if the Commissioner General has not exempted you, has not given you a letter that for this service that you are rendering, you exempt from the tax, and you go ahead not to charge, I think we have provisions there that will mandate the Commissioner General to collect the tax from you. So what we need to do is to educate people to ensure that they register with the Commissioner General. And as I indicated, the Commissioner General will quickly come up with the guidelines as to which type of service that should be exempted. But until then, all services are required to attract the tax.
Great. So I'm going to call, I've seen some hands up, about 5 of them. I'm going to call you. Please, if you have a question, kindly raise your hand and I will call you. So I'm going to start with Nana Ewusi. After Nana Ewusi, I'll come to Eben Inkansa, then Felix Togsla. Felix Togsla will follow. So Nana Ewusi, please unmute and then let's hear you. Okay, Nana Ewusi, I'm not hearing you. Even okay, Nana Ewusi.
Can I be heard? Thank you very much.
Yes, you can be heard. All right.
Yeah.
Let's hear
so,
you.
Thank you very much for this training. My question is this: for those who previously under the flat rate, I don't know if now that they are required to move to the standard. Do we have any legal basis for that? I mean, that communique or that directive? Because obviously they were registered under flat rate. Flat rate has been abolished, but just by word of mouth, the Commissioner General is saying that they should actually start charging standard. what then becomes the legal basis for that matter? Thank you.
Thank you, Nana. I'll take Ebenezer and Cancer, then I'll take Felix, then Mr. Gyamera will answer. So Ebenezer, let's hear you.
Okay, thank you very much. Good afternoon. Please, I want to know, probably my one will be out of scope, but then I run a sole proprietor business, and the business was registered actually in 2017. But
I don't know whether I'm hearing Ebenezer. Mr. Gyamera, can you hear him?
No, please.
Okay. Ebenezer, kindly check your network and come again. Let me move to Felix. Felix, let's hear you. Felix, can we hear you? Otherwise, let me go to Dankwa. Kisi Dankwa.
Hello.
Oh,
Good
yeah,
afternoon.
Kisi Dankwa, let's hear you.
Okay. So my question is, I want to understand why, or the rationale behind the removal of export of service from the list of zero-rated supply. And
Okay.
also on the export of service, I realized that for free zones companies, supply, it used to be supply to a free zones company was zero-rated. However, in the new act, it's been specified as supply of goods. So supply of services invariably has been removed. I want to appreciate the rationale behind it.
Okay. So, Mr. Gerard, the first one is he was registered under the flash rate. Now he's being told by word of mouth that he should move to the standard. He wants to know the legal basis.
Okay, thank you. I'm surprised he's saying he's been told by word of mouth. It is by legislation. 1151 has indicated that one, if you look at the repeal provision, it has repealed Act 8. So all the provisions under 870 come 1st January 2026 were not applicable. From 1st January 2028, the applicable VAT law 1151. And at 1151 is saying that if you have a threshold of this amount above this, and you are dealing in taxable supply, register and pay the VAT at standard rates. So I don't know the kind of legal basis that he is asking for this part of this law. Is he telling me that 1151 is illegal? I'm afraid. So in the legislation is 1151, and you need to comply with.
Okay. So in the nutshell, the law that imposed the flat rate is gone. So you cannot.
It's gone. It's abolished.
Okay.
Yeah.
Okay. So there's a question. I think he's looking at the list of export of zero-rated supply under the second schedule. He's saying that
now, why is it
supply of service is out? I mean, it's been taken out. Who asked the question? Can you come clear again?
So the question was export of service has been removed from the zero-rated supplies. And also with previously.
You mean this list, right?
Yes, this
the list you are seeing on my screen.
Yes, exactly.
Okay.
And also previously for free zones companies, supplies were zero-rated. However, in this new VAT Act, it's been limited to supply of goods. So being zero-rated.
But in the old one, you said free zones was under the services as well.
So the wording was supply to a free zones was exempt. It was part of the zero-rated supplies.
That was goods, right?
The wording was a supply to a free zones. However, in this act, it is a supply of goods.
Yes, so I'm with you together, but I'm looking at the old one, which is the paragraph 2, which specifically mentioned a supply of a supply. In fact, it reads a supply to a free zone developer, and that was under the supply of goods. So were you expecting, so if you come to the supply of service, which is paragraph 3, were you expecting to see it there in the old law before we come and do the comparative in the new law? Let's get that clarity. I'll defer to Mr. Gyamera, but I want to understand your question.
Francis, let me explain.
Okay.
Let me explain, Francis.
Okay.
In the first place, the free zone enclave that we've all been talking about is a special dispensation that has granted to persons that are operating in that enclave. It doesn't mean that those people are outside Ghana. So the old regulation, which exempted persons that were providing services to these free zone companies, charging at 0 rates, was a big anomaly. And it did not bring equity in the system. So for a tax practitioner, you provide tax service to a company in the free zone, you get 0 rates. But somebody provide the same tax service to a non-free zone, then that person the VAT. Meanwhile, all of you are in the country. So that particular provision was it didn't sit well so far as expanding base was concerned. Hence the removal to ensure that there is equity in the system. So that is the reason behind this. Thank you.
So, Mr. Gyamera, then I think maybe complete his question. The other leg of the question was, is services also now taxable? If I provide services from Ghana to, let's say, I do accountants or consultancy service to somebody in UK, am I supposed to charge VAT?
Once that is exported outside the country, that is it's taxable, but it is taxable as 0.
Okay, so my colleague who asked the question, were you expecting to see it under the 3rd paragraph as I'm showing? I want to be sure whether you are fine.
Yes, so in the previous act it was stated there, but in the current act it's not there.
Yeah, for the free zone, yes, we have to remove that one.
No, but I think he's asking for the services. His question is services too. He can't see it here.
Yeah, for the services, once you are providing a service, and you can prove that that service is in fact, if you go to a place of supply and definition, I think those places are very clear to tell you where the tax should be, if the tax is chargeable or not. So that has been cleared when we look at, for instance, as you indicated, when we do the technical discussion,
exactly,
we can deal with some of this.
You've just taken the words from my mouth.
Then we can go back and read the text and see whether those provisions have been well catered for.
Correct. So, Ebenezer Cancer, or I don't know whether it was Kisi Dankwa, we're going to have another one. You have your section open. We'll have our session open. We'll read it together. If there is something that we need to draw government's attention, we'll quickly do that. But I think your question is well noted. So, Mr. Gyamera has clarified that, yes, free zones, after all, they are just our neighbors. So that has deliberately been taken out, and free supply to free zones should now attract a VAT. Thank you very much. Let me go to Philip Mensah. Philip, please speak. Philip Mensah. Otherwise, I'll go to Matahiko TSD. I don't. Okay, this is not a name. It doesn't sound like a name. Matahiko TSC unit. I'm sure you are with JRA. Matahiko. Is Philip available now? Philip Mensah. Okay. Priscilla Eduse. Priscilla, please, you can now talk. Okay, please, if
hello,
you do,
hello.
yeah,
Hello,
Philip
please can you
Mensah.
hear me? Hello.
Wait. Let's hear Priscilla because I think Mataiko, you were not coming through.
Okay.
So Priscilla, let's hear you.
Okay.
Then after you, Mataiko.
Hello. Okay, so please, what I wanted to ask is that for a service provider, say an accountant who may be doing what I'm saying, so let's say it's providing service on a basis to maybe an SME and to the charge them for and how does the VAT issue apply to them? Does the VAT
Sorry, Priscilla, do say I am struggling to hear you. I don't know whether your questions is even clear to Mr. Gyamera. I can't hear you. I can't hear your question. So maybe if you would like to either take the microphone to your mouth.
Hello? Yes.
It's better now.
Am I audible now? Okay. So what I'm asking
Yeah.
is that for an individual who is providing some services, let's say an accountancy service to a small SME firm or companies, how does the VAT apply to them? Does the individual have to register for VAT as an individual and then charge and pay? Or what would be the guidance for such a person in this situation?
Okay. Great. Priscilla, Mr. Gyamera will answer you. Mr. Gyamera, let's take Mataiko TSC. Mataiko, let's hear you. Mataiko.
Hello.
Yes.
Hello.
Yes, let's hear you.
Yes, this actually Philip.
Okay, your name appeared as Mataiko, so let's hear you.
Oh, really? Okay. That's fine. So my question has to do with a follow-up with the free zones. So in the new act we have now, we understand that now services provided to free zone entities are now considered as taxable supply. Now, previously, when it was zero rated, the free zone entities would submit what we call a Form 9 as evidence to prove that they actually from the free zone. With this new amendment, does the Form 9 still count that when they submit the Form 9, the VAT bit would have to be zero rated for them, or even with the Form 9, or we don't even expect them to even submit Form 9 in the first place?
Okay. All right. Let me go to Mr. Gyamera, but obviously it looks like it. Mr. Gyamera, two questions. First one is the Form 9. Should they continue to bring it? Should we reject it?
Francis, let me. I think the person that is required to register, it talks about the person. And then once you are dealing with, and person is defined, and it includes individual companies and that. So once you are dealing in a taxable supply, you are an individual, you're dealing with a taxable service. The law requires you to register and charge the VAT. Unless otherwise you have been exempted as I said. So we don't need to add anything to the law. You know, we need to read the law just as we read our Bible. Don't add, don't subtract. The law requires you to charge the VAT, and therefore that is what you are supposed to charge.
Okay, please, if I may, with a follow-up question.
Go ahead.
Yes. So yes, thank you very much. So which means that free zones are supposed to pay the taxes on invoices issued to them, with the Form 9 being invalid at the moment. Now, from 1st January, I think that I have seen a Form 9 document issued that has been approved after 1st January 2026. In that case, what do we do? Because the form now has been issued even after the effective date.
Yeah, maybe we need to recall. Mr. Gyamera.
Those administrative, okay, thank you. I think those administrative issues will be addressed by the Commissioner General. And I think that's the sense of this sensitization. So I think Institute will have to compile all the implementation challenges that is associated with this act. But let me clarify this. I think under 870, I'm struggling to find 870 actually treated supply to the free zone as zero weighted. I think it is rather making reference to 5 forces. But 5 forces was somewhere 2012, 2013. So you need to check your reference where, because this wasn't in 870. So check that one and let's see, please.
Okay, great.
So I think for the issue of Form 9 and other, these are implementation issues. And the Commissioner General, having come up with this, definitely will have to issue guidelines on what is expected for the free zones companies that are receiving services from the domestic front to comply. So that guidelines will come out, and I'm sure this will be packaged and given to Commissioner General.
I think CITJ will do our best to collate some of these comments quickly because January is already in motion, and we don't want any non-compliance, especially with this removal of taxes. So thank you, Mr. Gyamera. Let's go to
because I don't want to answer. I don't want to answer for the Commissioner General. I'm no more there. Right. So I know the best I can do is that yes, something will have to be done, but then
yes, and the points are well noted. We'll jot it down, have an engagement with the Commissioner General, and then we'll see how it's addressed. But like Mr. Gyamera said, some of these things we're going to create a bigger platform for us to read and law together, then put some recommendations together and send it to the Commissioner General. So please, Wazim Mataiko, please endeavor to join the deep dive, the technical training. By the end of this session, I will show you how we're going to do it. We've grouped Ghana into 3, categories. And by the time we finish, I'm sure something will come out to refine this law, especially if it was made by error or something that they omitted. All right, let me go to Josie.
Please have a last question, if you would.
Hey, okay.
Yes, so this new act has also expanded the VAT threshold for the supply of goods from 200,000 to 750,000. I want to ask, for businesses who buy from entities who are eligibly not required to register for VAT, what is in for them with respect to using those invoices or whatever as proof for deductibility?
Because I don't know where he got his question clearly. Hello, Mr. Gyamera.
So okay, I got it. So you are still buying from a non-VAT registered person. But if it comes out that Commissioner General with the system operating the invoices and that they are operating, they will be able to know the volume of activities of the taxpayer. So if it comes out that the Commissioner General has information that person's turnover ask him or her to have registered and they didn't register, then you stand to lose that deduction. So I would advise that you need to find out ensure you are not buying from roadside people who should have registered. But the essence of this is for all of us to ensure that we are also supporting in enforcing the law. So why don't you advise your client that to ensure you get deductibility for your expenses and other things, please make, because of the Commissioner General guidelines on deductibility, make sure you procure from VAT registered persons. Then you get invoices to support that. Otherwise, you are challenges for risk for your clients.
Great.
Great. We shouldn't try to, create, circumvent the law just to avoid payment of the tax. To say, oh, I'm a tax practitioner, I help my people not to pay. When if they are supposed to register and pay, let them register. Most of the people who are trading, 750, if you divide by 12, it's coming to how much for a month? 750 by 12. Let me do the arithmetic. It comes to around 60,000. Meanwhile, the transaction that you are having with this person may be more than 62,000. So if the person is telling you he is not registrable for VAT, what makes you think that they believe you? If one transaction, one purchase is more than 62,000 and the person failed to give you VAT invoice, but this 62,000 is supposed to be sales for a whole month minimum. And if the person is, you have gone there, you have purchased an item costing 20,000 one, and this person is saying that, oh, I don't make 750, and you still believe. I think that when you submit your receipt, income tax purposes, the Commissioner General has the power to reject that, because one transaction, one, and are you the only customer of the person? So please, let us all support in the tax administration. This is the only way that we can all work together, improve on domestic revenue mobilization to support the development of this country. So when the laws come, it is not trying to circumvent it, trying to get the loophole. This is what we can do. If you do that, I can tell you the Commissioner General has the powers to disregard some of the transactions. Don't forget the general anti-avoidance persists. So please, this is a humble advice. Sit with your clients, let them know that this is it. And we are talking about annual turnover, not one transaction. Annual. 62,000. So please, let's go at times some of this and we try ask the question as if we want to get loopholes to support compliance. That is the essence. The essence of this is to get the understanding and help people to comply for improved revenue mobilization for all of us.
Great.
We develop the country, we develop it for every.
Great. That is very fantastic, Mr. Gyamera. But Mr. Gyamera, as part of the support, someone is asking, can GRE create some portal to check whether a potential seller is registered for VAT or not? So maybe I want to buy, if I have the 10, I can just go online and check. Is it a good recommendation to make to the GRE? So that, for example, if you are not registered, if you are not registered, I will not even.
Once GRE start operating there, now I think the law, once Commissioner General is able to roll out the certifying invoicing system and the fiscal electronic device the law talks about. The Commissioner General will have visibility of all transactions across the country, and that will make this thing very easy for Commissioner General to check.
Okay, great. Let me go to Savula. Please go ahead.
Yeah, I have a question. So probably we have some old stock with us, where those are largely import stock, wherein we have paid 5% levies also during the import in 2025, right? So those stocks are still with us. So if we right now we don't know whether we will be able to take the input credit of those levies which we have paid, because as per the new law, the levies are allowed to be taken as an input. Otherwise, if we are not able to allow the credit of that, otherwise it will continue to be a double taxation.
Mr. Gyamera is asking that he has old stock. He paid the levies, he didn't claim them, but now he's supposed to charge the new taxes. What must he do? Otherwise, he sees it as a double tax.
No. Okay, thank you. It's not a double tax. You need to get your stock and what is the tax component of the stock. So you have the value of the stock, you disaggregate it into the tax and the value, so that the input for the stock can be claimed. And I think the commissioner has issued guidelines to the officers to work with taxpayers who are under the flat rate. So they will contact them, or they should just talk to the tax office and they will guide them and claim the input tax on the stock that he has. Thank you.
Sabru, is your question answered? Are you clear now?
So we are not registered as a flat rate right now. We are a regular taxpayer, but still, as we got that info.
But in any case, let me find out the one. What is it dealing in?
Sabru, what do you deal in?
We deal in rice import.
Deal in what?
Rice.
Rice
import. Yes.
Rice. But you import rice and you still charge what flat rate?
No.
Were you
we are
supposed to be
charging the
under the
standard
flat
rate
in the first place?
No. We are not charging flat rate. So that is what my question is.
You are not on the flat.
No. We are on a regular rate, like 15% plus 6% earlier, which we used to pay.
So it looks like he's on a standard rate, but his question is that he imported and paid the levy, which he could not claim. Now he's selling. So
yeah,
what
so
happens?
you just have to get. So what it means is that now the levies on the stock can be claimed from 1st of January.
Okay, so the old stock that he bought before, the old stock he cleared at the port and imported into the warehouse. Yes. He paid the levies on. He cannot claim those levies. Now, he's selling now. If he charges those one, he can file and charge output VAT. However, the old stock, he cannot claim the levies. Savru, is that your question?
Yes. So let's say I would say for the old stock, I have paid 6% on import, or I would say right now only 5% is allowed, right? So again, if I'm selling, I have to pay 5% again to the government.
Go ahead.
I think what he has to do is that he should contact the tax office. They will know the input that he has to claim on the stock.
Okay.
This is not the first time we are migrating this, and the officers know how to deal with this.
Okay. All right. So, Savro, please kindly walk to the tax office.
Yeah, thanks for your
see what they can do for you. Let me go to the Mr. Gyamera. Someone is asking that he has real estate. Is he supposed to claim input VAT on it? Because before he was charging 5%. Now that he's on the standard rate, can
real
he claim
estate
the VAT?
comes under standard now. Yes.
Okay. So they can claim the
Why
input
not?
VAT. All right. Let me go to
Yes.
Shakib.
But
Shakib.
all those ones, I'm expecting that the administrative guidelines will clarify how real estates can claim the VAT input and also charge the VAT. So all those ones are administrative issues where the Commissioner General will come up with this guideline.
Okay. All right.
The fact still remains that they are now supposed to charge the VAT as standard rate.
Great. So
and once you are charging at standard rate, you do input output. So what input claiming? And that one, the guidelines will come from the Commissioner General on the basis.
All right. So I'll go to Shakib Mahmood. Go ahead, Mr. General. Go ahead.
Yes. So some of the about how to handle the administrative issues, as I indicated, that this thing can be packaged and forwarded to the GRA for them to deal with it.
Great. Let me go to Mahmood. Mahmood, after Mahmood, I'll come to Jesse John Toffa. So Mahmood, let's hear you.
Okay. Good afternoon.
Good afternoon.
Okay. Please, for the flat rate taxpayers who are yet to be deregistered, what if they want to come under Section 13, which is voluntary registration? Do they have to wait for them to be deregistered before they apply for the voluntary registration, or they can apply now before they are deregistered?
Okay. Mr. General, do you want to take that?
Yes. I think for, thank you. Voluntary registration is open for persons who are not registered under the law, that they are not meeting the turnover threshold, they are not meeting the threshold, but yet they want to comply with the VAT. They can come under Section 13. That one is fine. If you still voluntary register, you register. But then you will charge the VAT at standard rates. Please, let's note that so far as the review is concerned, the flat rate scheme has been abolished.
Yes, I don't know if I can come.
It's been abolished. So if you are, if your threshold is below the 750, and you still want to register, then you can come under Section 13 and register voluntarily. That one, the law allows you to do that.
Okay. My question is that for now, they have to be deregistered. I don't know whether I'm correct on that. For the flat rate tax rate, they have to be deregistered. That's what we are made to know. So I'm saying that, do they have to wait for them to be deregistered before they come under Section 13, or they can apply for registration under Section 13 before the deregistration?
Okay, so that one, you can, instead of waiting to be deregistered, you can go to the office and request that even though you are not meeting the threshold and you are charging flat rate, you want to come under voluntary registration and register as a VAT taxpayer. The office will be happy to do that.
Great.
Thank you, sir.
Great.
And then secondly, I want a clarity on 13 sub 2, which has to do with the Commissioner General shall not register a person who applies to register as a taxable person under subsection 1 if the Commissioner is certified that that person has no fixed place of abode or business. I think in your earlier submission, you made mention that you've taken that fixed place of abode or business out, but I see that it is surfacing here. Maybe any explanation to that?
Yeah, I think for the voluntary registration, the Commissioner General really want to know where you are operating from. So people don't come and just register and abscond. So for voluntary registration, Commissioner General will necessarily want to know where you are located, business that you are doing, and so forth. That is why we still have that one under this.
Okay. Thank you very much, sir. Thank you.
Great. Thank you, Mahmoud. Let's go to Gilbert Asariado.
Oh, I suppose you called me to ask my question after Mahmoud.
My apologies. Jesse, let's hear you.
All right. Thank you very much for the opportunity. My question has to do with for licensed corporate trustees who manage pension funds. Are they VAT registrable? Now that there is
Yes, once you are providing a service, management service that they are providing, they are getting. That is a vatable transaction. And once you are dealing with in this, you are required under the register.
Okay, so Mr. Gyamera, can you help me understand specifically which is it what exactly are we to tax, or what exactly is taxable in the line of management services? Is it the
services that they render? The services they render. What service? If a bank renders any service to that service is different from a banking activity, and that one is vatable, and you are required to charge the VAT on that. So in the same way, if you are a fund manager or
a corporate trustee,
what have you, are rendering a service, a corporate trustee, and you are performing a service.
Okay.
You are performing a service. That service, you are supposed, it's a vatable transaction. You see, 1005 date in 2019 was just to exempt some group of private equity fund and from charging this the payment fee or the service fee that they were charging. Is it different from you also providing services to other entities that you will charge the VAT? It was a complete anomaly. And some group of businesses. So this one has to be removed and ensure that there is equity in our equity and fairness in tax administration.
Okay. Thank you very much, Mr. Gyamera.
Great. We still have more questions. So, Mr. Gyamera, I'll go to Gilbert Asariado.
Okay, Timo, thank you for the opportunity. Can I be heard?
Yes, we can hear you. Go ahead.
Okay, good. Mr. Gyamera, there's this institution that I work with, and last year you contracted a service provider, and as part of the contract, some VAT was charged, but you are yet to make the payment. Actually, payment is to be made this month. I want to find out from you whether you should ignore the contract sum that he gave us, because the VAT on which he calculated the tax is no longer applicable, or the fact that the contract was done last year, it will still go ahead and pay the contract sum.
So again, I think these are issues that will be addressed in the administrative guidelines. So let's wait for our Commissioner General is going to deal with such transactions, contract that were signed. I don't think we need to take it in rare cases. But let's see the general guidelines that will come to ensure that transactions of this nature are dealt with in implementing acts.
So will you advise us to suspend payments?
No, I'm not saying I'm suspending anything.
Gilbert, please go to the GRA. Go to the GRA office. Don't suspend payment. We need the money.
Don't suspend.
But I think,
no,
like
what
Mr.
I mean
Gyamera
is,
said,
Timo, what I mean is, should suspend payment to this contractor who has already performed his work?
That would be difficult to advise,
Now,
especially
are you
here.
talking about payment, or you are talking about the what do you call the service provided? What is the tax point here? When what?
No, the service has already been
performed.
It was performed last year, and we are to authorize the payment this year.
But so you have to go back to the section that deals with the supply of service and determine the time of the supply. If the supply is deemed to have been done in from 1st January 2026, then the new law, the new VAT Act will apply. But if the supply was done, but it's left with the payment, that one, the VAT that is applicable to that. And I think this, you accountant, you know how to deal with this time. Mm-hmm. So the section that deals with the supply, time of supply of service and time of supply, as clarified what the tax point should be, and that is what you need to do. And as I indicated, nothing has changed except that the separation has come to the Act. And for purposes of VAT, the time of supply is very key for you to determine the tax points.
So Roger, please find not Roger, Gilbert, find a way to pay your supplier, so that it doesn't create another problem for you. Let me go to Roger Usubuafu. Roger, let's hear you. After Roger, then I'll come to Amanu.
Please, thank you for the opportunity. Let's take the local, the MMDs, who deals with contractors. You know, some of these contractors, some of them just execute one job, or now that the tables have 10, some might not even be in existence. So with such people, if the person's contract is maybe 50,000 or 500,000, because the threshold is 750, does it mean automatically the person is not VAT registered, or the person should be delisted from as a VAT registered person? Because PPA requirement requires that you have to provide a VAT clearance certificate.
Can you come again?
And then the new.
Your question is not clear, please.
My question is that with contractors before 2025 who have executed contracts from 2024 to 2025, some of them, because of the change of government, will not be able to execute other contracts again. So if the threshold is 750, the threshold for VAT is 750. If their contract sum falls below the 750,000, does it mean they should be delisted from being VAT registered? Then the new contract that will be awarded in 2026, the new contractors, if their contracts are not up to 750,000 threshold, does it mean they are not required to be VAT registered?
Thank you. We're talking about registration here. Yes. So during the tax year, if you registered in year one and you met the threshold, started complying, maybe in the course of the your operation year 2, year 3, you are not meeting the threshold, and you want to be deregistered. You need to get the Commissioner General, and they have a system of checking to deregister. It is not you who voluntarily say you are not going to comply. Once you are registered, for you to be deregistered, the commission is satisfied. So you need to submit your details transaction to the Commissioner General. And the Commissioner General will check and find out whether indeed you are not meeting the threshold. And he will take steps to deal with, not you. You should continue to comply with the Act until the Commissioner General has deregistered.
Great. So, Amanu, I believe your question has been answered. Let's go to Gerard. Gerard.
Yes, hello.
Yes.
Okay. So please, I have 2 questions. The first one is, since we are still working our way around the new changes, will we be given any grace period for errors? And the second question is,
no, wait. When I grace period for errors?
Yes.
Okay.
For the implementation, yes.
Okay. Go ahead.
And for the second question,
Francis.
Yes.
Francis.
Yes.
Please. I made it clear in my presentation that commencement date of this is 1st of January 2026. So from 1st January 2026, we are supposed to comply with the law. And that is what has been given to us. So where is any room for what error or whatever? You pay for. If you are supposed to register and charge the VAT, do so. And if you are supposed to advise your client, go back. Today you've got the education. Go back to your client and let them know what is. So far as the VAT Act 1151 is concerned, and let them comply. They should comply. If they have any challenges, they should write and go to Commissioner General. And Commissioner General will clarify things for them. It is not for you to say that we want a grace period. Grace period for what? When Parliament has given us to commence implementation, you need one grace period. There's no grace period. We are implementing this has been given, and that is from 1st of January 2026. We are all supposed to. Thank you.
Great. So let me go to Alisu Inusa and then
please, I
come
have
to
the second question. No, I didn't ask my second question.
All right, let's hear your second question.
So the second question is for services that have been rendered already in the previous year, 2025, and the invoice is now shared in 2026. Are we to apply the old taxes or the current taxes, the new one?
Mr. Gyamera, so his question is, services have been provided last year. Yes, Mr. Gyamera.
Francis.
Yes, sir.
I think what I'm getting from the questions that are coming is that I think most people are finding it difficult to appreciate the concept of time of supply and supply of service and time of supply of goods and so forth. And at what point is the tax point? I think it's discussion is a challenge, and that is why people are asking transactions that were done in 2025 what should be the tax implication, the VAT implication, if it, so. I think my recommendation is for the institute to take up this and take officers through what is expected of them when we talk about time of supply, to know the tax fund at which the tax is due. You know, you charge, and then it has also a payment. So if you charge the VAT in 2025, if the tax fund 25, the tax was due in 2025. If you didn't pay in 2025 and you are paying it in 2026, that also has its own implications. Are you getting that one? Something that you need to take note of this, and I think from the discussion, it's a big challenge for officers, for people appreciating this, and it should.
Mr. Gyamera, I agree perfectly with you. And like Madam President said, we noticed that there's a little gap, not too much. We're not saying that people do not know how to do it, but certainly we need to continuously learn. So please, we noticed that some it's 4 p.m. now, some have some other activities to do. We just want to throw in this announcement. Like Mr. Gyamera has said, we noticed there's a technical gap, not too big, but we believe that we need to walk through the practical application and how it affects businesses. So, for example, you issue an invoice and you didn't pay. What is the implication? So, please, we have put together this value-added tax technical training. It's going to be online. We've tried to cover the whole Ghana, but then it's going to be in 3 sessions. So we are going to have the Accra VAT zone, which we scheduled to be 28th of January. Then we're going to have Takoradi VAT zone. And so for Accra, we're targeting businesses that are located in Greater Accra region, Central region, Eastern region, Volta, and then Oti region. Please, the fee is going to be from 9 a.m. to 3 p.m. We're going to have a longer session. We are charging just $600. That is about $6. Ideally, it's just to help the institute cover, the subscription and all those things. So please make it a point. We'll be sending the notice around. Someone is telling me that we should charge 1,000. Maybe we'll look at it so that but it's not for, we are an institute. We intend to just recover something small. As for $600, you can sponsor 10, 15 of your employees. Please come and let us discuss the actual implications of what you do, so you don't find yourself in trouble. Remember, Commissioner General has said they have removed all the tax. In fact, even not the Commissioner General, Minister of Finance said they have given away this taxes, recoupling, and then all those things. The next stage is going to be compliance. So you cannot continue to be making mistakes on the guise of, we don't know. We need to understand it and apply it properly. So please watch out. When it is time, it is going to be a registered course. Register, pay 600 cedis, and then you can join. So, Mr. Gyamera, thank you very much for the observation. We'll continue to help businesses understand. And trust me, we're going to bring the technical people here to explain. It looks like it's 4 p.m. I've kept Mr. Gyamera for a very long time. Let me take some few more questions. Mr. Gyamera, permit me to take some few more questions. Then we can move. Gerard, have you asked your question? Were you the one who asked the question?
Yeah, I'm okay.
Okay, so let's go to Ali Inusa. Ali Inusa, please ask your question. From there, then I'll go to Sylvester Mensah.
All right, thank you very much. So my question is on Section 45 of the new Act. That is taxable value for determining tax on imported goods and services. So I've realized that the Section 45 was not amended to exclude the levies, that is the NHL and GET fund, from the value of imports. does it suggest that the cascading effect, which was removed on the, regular VAT that is charged within the country, has not been removed on value of imports?
This is a technical question. So, Mr. Gyamera, his question is that if you look at the taxable value of the value of taxable supply, we have taken the end he'll get fund out. But he thinks that when it comes to the imports, that separation did not take place.
Yes. So yeah. For the import, you add the import tax before you arrive as a value. What has been taken off is the levies. So you now it has a new definition, which the value is calculated in accordance with the customs tax. In this case, you add the import duty and the tax after, other than the tax. So all other taxes are added before you charge the VAT.
Mr. Gyamera, clarify. Does it mean that the COVID-19, what do you call it, the end heal and get fund are added before we calculate the VAT as far as the port is concerned? I think, Sylvester, that's the import of your question, right? Or is it no, sir?
Yes, exactly. That's the import of my question.
Okay. All right. So if I hear Mr. Gyamera, what he's saying is that the import duties and taxes has been defined. So as far as the Section 42 has separated the levies, in fact, no, sorry, 44. The 44 has already separated the levies. So
44, yes.
Yes, so that separation is supposed to run through, but we have to do this technical analysis. So are you joining us come 28? Hopefully, yes. But we've noticed it. When we get there, we'll put the law, try to look at the interpretation as well. Like Mr. Gyamera said, and the interpretation session is being amended. Therefore, it's not supposed to be tax on tax at the port. It's supposed to be uniform. Let me go to Sylvester Mensah. Sylvester.
Yeah.
Hello, good evening. And
good evening. Let's
I think, yeah, I should be okay because I also had that concern that Inusa shared on the import, and also when it comes to the time of supply, I think I should be fine because the concern was that if the supply was done prior years, let's say last year, and we are now raising the invoice, which regimes apply? Is it the old regime or the new regime? But I think based on the explanation, if the time of supply was last year, then the old regime should suffice. So I think I should be okay. Yeah.
Great.
So
thank you very much. Thank you. We'll do more of those technical analysis. We'll do most of those technical analysis when we meet. Ibrahim Asari. Ibrahim, let's hear you.
Thank you, Francis, and good evening to you and other participants. My question is on Section 6, that's Section 6.1. That's 6.1A and B, especially the A. You realize that the introduction of the registration threshold, the 750,000, it did not cater for service providers.
Yeah.
And I want to understand the policy rationale behind service providers not being given any registration threshold.
Ibrahim, Mr. Gyamera, when he was walking through here, gave the explanation that you do not need. However, the Commissioner General would direct. It was targeted at service providers. So that is the policy rationale, that it was deliberate that they had to take away the service providers out. However, it doesn't mean that everybody is going to be registered. Commissioner General will come out with the guidelines. If you read the ending text, it said unless otherwise directed by the Commissioner General. So hopefully the guidelines that will come will otherwise direct by the Commissioner General. So that is the explanation, Mr. Gyamera. I believe that maybe by that time you had not joined. So that is it. Ibrahim, do you have another question?
No, I'm fine
All right.
now.
Hope to see you during the technical analysis. That way we'll bring all the laws. The 1998 one, the 2013 one, and then this one. Then we'll do the analysis to see. Let's go to Paul Bimpe. Paul,
Hello.
let's hear you. Oh, sorry. Paul, you can now unmute and talk. I don't know what happened to Paul, whether he has dropped off or it's myself. Femo, please, you can talk. Paul, please come back if maybe I accidentally muted you. Femo, let's hear you. Sylvester Mensah, I don't know whether you've asked your question. Sylvester and Femo.
Yes, I'm okay. I asked already.
All right, let's go to Raphael Kabute Okanse. Raphael. So
Hello.
Raphael, let's hear you.
Yes, so I have two questions. One, even though I came in late, but maybe this will also help me. So if you have a supplier of services who is above the threshold, but this same supplier is not willing to register for VAT, what do we do? Is there a way out?
He qualifies, but he's not willing.
Qualifies, but not willing.
Okay, maybe you can give a tip off to GRE, or you don't buy from him, because this is a breach of the law anyway. But I'll reserve it for Mr. Gyamera to answer.
Yes,
Let's go to
but, failure to register if you qualify, it has its own sanctions. So my advice is just tell the person to do the needful. Otherwise, when he's caught, when I explain the provisions and the evasion failure to issue VAT invoice, I told we have the administrative and that of the judicial. So the best is to advise your client to comply. You can never run away all the time. You will definitely be caught. Somebody will come and buy, they want to trace and find out who did that. And if the person is caught, the Commissioner General will deal with that person.
Okay. Secondly,
tell the person to comply.
Okay. Please, my second question is, in case I have a supplier who supplies, but this supplier is below the threshold and therefore cannot register for VAT, are we liable to take withholding from this supplier if the transaction is above 2,000?
Do you register for VAT? Are you appointed for VAT withholding?
No.
Okay, then in that case, you don't have power to withhold.
Okay.
All right. So, Raphael, we will meet on the 28th to do some of this technical analysis, right? Let's go to
I am in Takrady.
No problem. Our Takrady, we have you in scope. We have you in scope. We're going to cover all the 16 regions. So no shaking about, no shaking crowd. We'll come to you. So please jot down all your questions, especially the practical ones in your business. And between 9 a.m. to 3 p.m. we'll address this. It's just $6. Okay.
Okay. Thank you, Francis.
Great. Let's go to Femo. I think my guest is tired, but I'll try as much as possible to take the remaining questions. So please, if you can be brief, then we'll meet at the technical session. Femo.
Okay, thank you for the presentation. My question, I think, part has been answered, but then it's about supplies that were made to us last year, and payment is supposed to be done this year. Some of the clients don't have their VAT booklets. Some say theirs is finished, so they went to the GRA office for VAT. They want to pay the VAT on the in the amounts that they are supposed to be paid. But GRA says that since we are paying them this year, it has to be 20%. But the supply was done last year with 4% VAT calculation. But they are now telling them that they have to pay 20%. And this is bringing some kind of confusion between us and then our suppliers, and then GRA, and the suppliers are going back and forth about this whole thing. So I want to I want to be so sure and clear on what we should do to those who have already supplied us last year, but payment is due this year.
Okay, so what Mr. Gyamera said earlier was that the tax point is either the issue of the invoice or when the services were provided. So granted that they provided last year and they are now issuing the invoice today, then the tax point should be the new ones. Mr. Gyamera, do you want to respond? If I heard you right. Mr. Gyamera.
Yes. The issue here is that you did the tax last year. Why didn't you issue the invoice? And you are now waiting to issue the invoice this year. Because the transaction was concluded last year. If that was the case, then you should have the support of that. How did you supply when you didn't have invoice? That is even trying to avoid. So if they didn't issue the invoice and they are trying to with last year's transaction and we are issuing the invoice this year, then no 3%, charge 20%. And I agree perfectly with the GRA that then the transaction is taking place now and the rate is 20%. Other than that, then they will charge you for evasion of the tax.
All right.
Because if it was due last year and you failed to issue the invoice, that has its own sanction provision. Should they apply that sanction, or you pay the 20% and you let sleeping dogs lie?
Great. Yeah, let's sleeping dogs lie. Otherwise, you'll be exposing yourself.
We should, yes. Of this thing, you go to the office trying to make a case, but you yourself, you know you haven't done the right thing. You know the tax is due when the transaction is consummated. But you have done the transaction, you have issued the invoice. Now you are coming now to say that, oh, this transaction was done in last year. If it was done in last year, why didn't you file the returns with the office? The office would have known. If you didn't pay, the office would have charged appropriate interest and so forth, so that the compliance will continue. But you fail to disclose. You fail to show it to the Commissioner General. Now you are the Commissioner General don't know. I want to issue 4% instead of 20%. What kind of analysis?
So that is,
we do these things and we create problem for status and think that GRA is unreasonable. But when you yourself, you are not doing the right thing, and you are the accountant or you are the advisor, let your client know that they should have done the right thing last year, if indeed the transaction took place last year. If not, then what the GRA is saying is right.
Yeah.
Let us all try and comply. Let us try and ensure that we are complying with that. Nobody is going to develop this country for us. It is the taxes that we collect that is used to develop the country. And you and I have to support in the revenue mobilization of this country.
Great. Mr. Gyamera, we've made a point. Thank you very much. So I think we're seeing some compliance issue that needs to be solved. And I think that the technical session is going to solve it. So please, if you are here, an accountant or whoever you are, please make it a point to join us on the various days that has been announced. It's going to be virtual, so you can join anywhere. At that point, you can still ask all your questions. I've seen that some have questions that we will not be able to attend to those questions. Let me go to Richard. Richard, be brief because we are bringing our session to an end. Richard, let's hear you. Otherwise, I'll go to Mohammed Mustafa.
Yeah, yes. Hello, sorry. I just
Richard.
wanted clarity on this. Individuals who provide consultancy services. I understand generally services is supposed to be VAT registered. So for an individual that does consultancy services, first of all, are they generally required to register? That is the main question.
Okay, Mr. Gyamera will address it. But individual as a consultant, a business, right? You are doing business, isn't it?
Yes, individual as a consultant. I mean, can be a professional in any of the professional domains who renders VAT to maybe another to businesses. Yes, and things.
All right.
Like that.
Let's go to Mustafa. Let's take your question and then we'll add it to this one. Mustafa.
Okay, Francis. Good evening. Thanks so much. My question is, I'm looking at the travel and tour industry operating as an agent. When you are issuing tickets to your customers, do you have to issue a VAT invoice to them?
Okay.
Thank you.
Travel and tour. Let me go to Prince. Prince, ask your question.
Yeah, hello, Francis. Good evening. Thanks for the presentation. I'm also looking at the real estate industry. Kindly confirm this for me. So first of all, if I have a contract and then I have the installment plan from 2025 to 2026. So from 2025, the VAT on it is 6%, but from 2026 installment, the VAT is going to be 20%. Please confirm this arrangement for me, please. Thank you.
Let's go to Ms. Bill Amadou. Ms. Bill Amadou, let's hear you. Ms. Bill Amadou. Okay, Roger.
Thank you very much.
Okay, let's take Ms. Bill. Ms. Bill, let's hear you. After that, then Roger.
Thank you so much for the opportunity. Please, I want Mr. Gyamera to throw more light on the modified taxation and then the VAT, because the modified taxation, that's on income tax, but the VAT is an indirect tax. I don't know the relationship between them, and especially those who fall between the revenue, those whose revenue fall between 500 and 1,000 and 500,001, and then someone.
Okay, I think that, sorry, something happened to Ms. Bill. So, Mr. Gyamera, he was looking for the relationship between modified taxation and
Francis.
Yes.
Okay. So on that one, I think for the modified taxation, the Commissioner General has spoken on countless occasions, saying that those who come under below the threshold, most of them will be brought onto the modified taxation, which was launched last year. So DRA is working on that one to ensure all those who are out of the threshold will come under that program. So let's leave that. And that one come under the income tax, which I agree. The other one, which we was talking about individual, I think you see the law, and I think I indicated earlier. The section that deals with registration talks about the person, and person is defined to be to include individual. So if an individual you're dealing in a taxable transaction, and i.e. taxable services, you are supposed to register, charge the VAT, and pay. That is the position of the law, unless otherwise the Commissioner General has exempted you from that. Until then, you are required to charge the VAT. This is the position of the law.
Great. Thank you. There was also a real estate. I think it's more of a technical question. He says that
yes, for for the real estate, as the laws, I think I've explained that the law now say that you are supposed to charge a standard rate. GRA issued guidelines on how you should charge your VAT when you sell properties. GRA is expected to come up with the basis of computing the VAT under the new law now, because it's no longer a flat rate. So I'm sure GRA will issue guidelines to the real estate people to comply.
Great. Mr. Gyamera, I have about 5 more questions, then we'll close this session. So I'll go to HB.
Francis, we can, I think the third question, take them, we can respond to them. Because it's repetition.
Mr. Gyamera, I will let them be brief. I will let them be brief.
Thank you very much. I've taken you the VAT Act. Yes, and walked you through. And that is the assignment that you gave.
Yes.
And I think I've done justice.
I know. Permit me to take the last 2 questions. So let me go to Gina. Gina, be brief.
Oh, please, you called me.
Okay, let's hear you. Be brief.
Okay, so on the flat rate, those who were on the flat rate, what is their fate now? Especially when they don't meet the threshold. Are they supposed to charge the new at the new rate? Then what is the stake of withholding VAT as applicable by the new law?
Great. We will address that question. Let's go to Daniel.
Yeah, thank you very much, Auntie Momo. My question has to do with the free zones. So based on this new law, the payment of the supply by domestic suppliers of services to free zones entities. If free zones entities are to pay the VAT, how would they be able to recoup the input VAT? Because they largely are set up to export.
Great. Let's go to Gina. Gina, let's hear
Hi,
you.
Timo. Thank you so much. My question has already been answered, and thank you.
Okay, let's go to Ibrahim. Okay, let's go to Emmanuel Amankwa. Okay, Mr. Gyamera, I know you've answered already. She wants to know the fate of the flat rate people. What do they do? And then also the position of VAT withholding. And then the final one is the free zones. Just a brief. I know you've answered them already, but brief.
The flat rate is no more. Come first January. We don't have flat rates in our VAT regime. It's one of the distortions that we had, and that has been abolished. No flat rate. So once you are dealing in a Tazamo supply, you and a threshold, you come under the standard rates. Period. If you are below that one, then you are out of scope. So then another scheme will be developed for you. And from what Commissioner General is saying, you are going to come and modify taxation. And that is the position now. So if you are dealing in flat and you know that you are not meeting the threshold that has been given to you out of scope. As simple as that. And what is the next one?
He wants to know the VAT withholding.
The VAT withholding, nothing has changed, except that this time, as I indicated, the engagement made it clear that government should grant compliant taxpayers exemption. And that is what government has listened to business community and has provided that the Commissioner General now can exempt some people from suffering the VAT withholding, just like what we have in the income tax. Appointment and the deductions. Pardon?
No, go ahead. Go ahead.
Appointment and everything still stands the same, except the exemption provision, which has been. And that is a big plus for the government. And also a big plus for businesses that will be exempted instead of getting your taxes withheld.
Great. Ladies and gentlemen, I think that Mr. Gyamera has done more than we asked him, but we asked him to walk us through what has changed and the rationale. He has done so well. But just like the observation he made, it looks like we need to go into a technical session. Why people invoice and not pay. The basic accounting, let me call it audit issues or things that may land us into disagreement with the GRE. I've seen some also asking me some technical questions. For example, section 42 saying, what is the meaning of use? All of these things, you agree with me that we cannot address this in the walkthrough session. So just like we announced, we've categorized the country into 3 main groups. We're going to have the DTRD zone, which we intend to cover businesses and members who have problems in the Western region, Western North. Forgive me, I think Western has appeared. One should be Western North. All these regions, you have special problem. Please come between 9 a.m. and 3 p.m. I think that we should be able to judge and find a better position so that you do not fall foul of the non-compliance, because as you know, some taxes have been given away. The ministry is going to be very tough. GR is going to be pushed harder to ensure that compliance is at the top. And we'd like to thank you very much. At a point, we saw about 1,300 members on this platform. GRE is also streaming this in live on their YouTube page. So I believe that you go there, you'll have the opportunity to listen more. Because we do not have your email in our database, we may not be able to send this slide or this video to you, but go to YouTube, look for GRE YouTube page, and this was streamed, and I believe that you can get to listen again on that platform. But we hope to see you comes 28 and then the subsequent announcement. Come, let's learn and then make sure that we comply. But we would like to say thank you very much to Mr. Gyamera for this wonderful display of knowledge. In fact, Mr. Gyamera was the lead when we were doing the engagement with the stakeholders. So he has done what the stakeholders requested. At this point, let me go to our president for his closing remarks, and then we can say a good evening. Madam Tina. Tina has dropped off. Apologies, my apologies. So on that note, I will say on behalf of the president, we thank you very much. This is a new law. Certainly, mistakes may come, but let's not make that mistake, because if we do, as businessmen, consultants, GRE may not forgive us, especially because the tax rate has been reduced. Compliance is going to be high. Let's come together again during the technical session to learn more, ask all the relevant questions. We hope that maybe it's a new law, right? They are human who drafted it. You may have a different perspective, which will or can be considered in the subsequent amendments that may be done by the minister. Let's put it together and then discuss it during the technical session. Like I said, it's just $6. This is just some token. So hope to see you very soon and watch out for the various announcements. So Mr. Gyamera, on behalf of everybody, we say thank you for the knowledge shared, and we are grateful for everything. So members, at this juncture, we say thank you and have a very, very good evening.
Thank you.
Thank you, Mr. Gyamera.
Thank you.
Bye-bye.
Yes.